Stop what you are doing and listen closely. What I am about to tell you is not a theory or a prediction. It is a historical fact that just unfolded while the world was looking the other way. On Thursday night, January 9, 2026, the global silver market changed forever. While the mainstream media was obsessed with headlines about Iran and oil, the Shanghai Gold Exchange effectively defaulted on physical silver. This was not a small delay or a technical glitch, it was a total systemic failure. The event that the big banks swore could never happen just did, and if you have money in silver ETFs or paper contracts, you are standing on a trapdoor. The Shanghai collapse. Let's look at the hard numbers because they do not lie. On Thursday, January 9th, investors requested delivery of 64 tons of physical silver from the Shanghai Gold Exchange. For the largest physical exchange on Earth, that should have been a routine day. Instead, the exchange only delivered one single ton. That is a failure rate of over 98%. To put that in perspective, for every 100 ounces of silver demanded by holders, they received less than 2 ounces. The other 98 ounces simply do not exist in the vaults. Officials are trying to buy time by calling this a logistical settlement issue. They are terrified to use the word default, because the moment they do, the global market implodes. But make no mistake, when you ask for your metal and the vault doors are empty, that is a default. The war economy and the drain. Why did this happen now? It is not because China ran out of silver. China is the world's top refiner. The metal exists, but it is no longer available to you. On January 1, 2026, China locked down its silver exports. The metal is being diverted into military stockpiles. We are now in a global resource war. Silver is not just for jewelry anymore, it is strategic ammunition. Think about what a modern military needs. Silver is in every missile guidance system, every radar array, and every advanced satellite. The Patriot missile systems being deployed in the Middle East and the hypersonic missiles being tested in the East all require massive amounts of silver. Nations are hoarding the materials they need for survival. This is stage 4 of imperial collapse. First comes the debt, then the money printing, and finally the war economy where the government seizes all essential commodities. Silver has been drafted into the military, and the civilian market is being left with nothing but paper promises. The Monday morning gap. Tomorrow is Monday, January 13th. It is going to be a day for the history books. Because the Shanghai failure is not a secret in Asia, traders in Singapore and Mumbai are already panicking. Analysts are predicting a massive gap up at the open. This means the price won't just climb, it will teleport. We are looking at silver potentially opening between $82 and $85 per ounce instantly. In India, the MCX exchange is expected to hit all-time highs within the first hour of trading. The smart money is front-running this move right now. They are buying every physical ounce they can find because they know that when the West wakes up on Monday and sees the delivery data, the buying pressure will be overwhelming. The paper trap, SLV and COMEX. If you own silver through an ETF like SLV, you need to understand the cash settlement trap. SLV is custodied by JP Morgan. They claim to have the silver, but they also have a massive private hoard. If the price of physical silver goes to $150 while the paper price is at $80, do you really think JP Morgan will give you their physical metal? The fine print in the SLV prospectus allows them to settle your shares in cash during market disruptions. Shanghai just proved the disruption is here. You might get a check for $80 while the real metal is trading for double that on the street. You cannot build a solar panel or a missile with a check. The COMEX in New York is the next domino. They have roughly 30 million ounces of registered silver, but there are over 500 million ounces of paper claims against it. That is a 20-to-1 leverage ratio. When those paper holders see Shanghai fail, they are all going to rush for the exit at once. This is a bank run on silver. The first few people through the door get their metal. Everyone else gets a cash settlement at a fake price. The two-tier market. We are now entering a two-tier market. On one level, you have the paper price on your screen, which is a lie. On the other level, you have the physical price, which is the truth. Physical premiums are already exploding. Dealers are charging $15 to $20 over the spot price. Why? Because they know they cannot replace their inventory. This is exactly like the London gold pool collapse of 1968. The banks tried to suppress the price of gold at $35 until the vaults ran dry. When the system broke, the price didn't just rise, it reset. We are at that reset point for silver. Final verdict and action plan. Here is your bottom line. The bank run has begun. Shanghai was the first to close its doors, and the COMEX is teetering. If you own physical silver, do not sell it for paper currency that is being printed into oblivion. Hold your position. If you're in paper ETFs, consider the risk of being settled in cash while the metal vanishes. If you want to buy, do it now. The premiums are high, but the spot price is a fiction. In a shortage, the only price that matters is the price of the metal you can actually hold in your hand. Monday morning is the wake-up call. The era of cheap paper-backed silver is over. The era of the war economy has arrived. Get your money out of the paper system before the door locks for good.